Hello, welcome to Successful Trading. In a continuation of a series on Investing 101, today we bring you a video about the stock market performance over the last 10 years. Yesterday, we started with an introduction to the series with a tutorial on bond markets versus stock markets. As an investor, we want you to be able to get the knowledge on what type of return, performance return you are to expect out of the stock markets. By studying the last 10 years of the stock market performance, that will give you some idea and some nuances to be aware of. Without any further ado, let us go ahead and dive in. Okay, stock market performance over the last 10 years. Okay, that's on there. All right. Okay, folks. Let's dive in. What has the stock market as a whole has done over the last 10 years to help us understand where it might be going as an investor, right? So what we have done on here is we simply decided to take a comparison between the stock market, the overall stock market, if you will, through one index of SPY that we explained yesterday. SPY has 10 sectors in it and 500 companies that represent a good mix of the US equity, if you will. So over the last 10 years, going back, so let's say here, this beginning of 2001, this is the red line. It's how SPY has been performing. So for us, for that, this is actually, let's maybe bring it on here, yeah, to use this. So SPY is about 200% over the last. So this is the same chart of SPY on here. But there is one, actually, this blue line on here that we are showing you on here that has outperforms the broader market. So this is the broader market over the last 10 years. But within the broader market, there are sectors that will either do better or that will do it worse. You as an investor, is our job to somehow understand, not just to say, oh, if I were to invest $10,000 in 10 years ago, well, they would have gone to 200%, then hence you will have had an extra 20,000 on top of your 10,000, making it 30K on your current balance. But there are nuances. So which one is this? This one is the technology. So let's dive into what has made this go this. How much is the difference here? It's a whopping 300%. And most of it, folks, if you think that it happened over the last year. This is incredible, right? This is 2019 on here. So the delta between, let's say, the broader market here, it's at 120%, beginning of 2019, and the technology sector 240. It's still double, but my friend, look at it now where we stand. It has been an amazing work. So let's take a look at some of the companies as an investor of investor of stocks. Look at specific stocks that's a component of the technology sector. So for that, we are going to go to a tool on here. Let's start first of all with the so-called broader market. This is the sectors, the 10 sectors that are inside of SPY, right? So you can see that even from a year to year, a quarter to quarter, performance vary greatly. Yeah. Here are the technology sector. Yeah. So here we have this powerful tool such that if I click on it, it's actually going to give me the chart of all the companies there. Year to date, the technology sector is up 40%. The performance over the year. So the difference between year to date, meaning we start exactly at the beginning of the year, right? The performance over the year will take us, let's say, December 2019 to December 1st, when this video has been made. That's the difference on there. Over the half year, just a half of this year, over the last six months, has not been the best sector. The best sector has been consumer cyclical. So you see some nuances on there. Over the last quarter, the best sector has been actually the industrial. And we can dive in to see, for instance, if we do this, it gives us individual stocks that are part of it. We, I think, seeing on here, for instance, airlines, that they have been going through a hard time. And here we can do some top of filtering as investors, right? To say, okay, in terms of, do they pay dividend? If we wanted to do that, we could do that. Dividend, whatever dividend that we want, let's say 6%. There are only 8 stocks within this this sector that pay dividend greater than 6%. And we can just do this if you're interested in technical analysis to get a chart of it. But for us, let's go back here to just highlight some of the performance differences. Yeah, let's go back one between the different sectors inside of the broader market. So SPY represents the broader markets, and within it, you have sectors that behave differently. Maybe let's go and show you a representation of that on a chart, on the diagram on here, if you will. So what are we looking at? We are looking at the 1 year performance per sector, those technology, consumer, cyclical, financial, and other like, and each of them represented by colors. But now you can see individual stock represented by just hovering over them. Let's say return, for instance, year to date for Nvidia, 147% is one of the best by far. Now I'm sure your eyes has come on here. Yes, this is HC. It's in part of consumer cyclical, and this is what HC has been able to do in over its 1 year performance is 270% return. So this year, by doing this stock market performance analysis over the last 10 years, we want to bring in the notion that not all returns are equal, right? So meaning that depending on, we have to pick stocks, just if we're investing in the stock markets, and whatever we pick based on numerous factors, and trust me, there are tools that will bring you here. I can't think of this very one that we are looking at, filtering different type of criteria that fit your investment timeline, or even a tool that we did recently. I'm going to be putting it here exactly at this time in this video. So I have to take a note of that. So it's called Simply Wall Street. So that's another tool that's very simple, very intuitive, and graphical, where it gives you this type of view. So other returns here. So the sector that has been doing not so well, you can look at it's green here. I mean, but even in the financial, look at the difference between PayPal, 98% return, and Wells Fargo, minus 49.78, minus 50%, within the same sector, if you will. Yeah. So that does give you an idea on here. But the one thing that for us we really need to focus on is year-over-year performance. Is that a way to give us an indication about the future? That's not always the case. So meaning when you're picking your investment or you're picking your stock, are you to say that, oh, because the previous year it has done this, the market has definitely done something unprecedented here? That's what the main takeaway is, because we can see between 2001 and 2009, really 2010, if you will, or even 2011, the return of the stock markets were not that great. We saw a little bit of that yesterday, right? So now these 10 years, they are painting a picture that's a little bit brighter than the full history of the stock market. Hence, as an investor, a new investor, maybe you can be drawn in thinking that, oh, the past performance over the last 10 years is an indication of what's to come. We do not know, but we just need to be mindful of that. And then the other thing is definitely here that focusing on specific industry, how they are performing, we have tools to help us do that. As we just showcase here, for instance, that over the the year to date, the energy sector is definitely a big laggard by far, almost minus 40% on here. Yeah, so these are the type of knowledge that we want to bring forward to you to you here at Successful Trading, such that you can continue to educate yourself and with the resources, with the tools to become a better investor, a better trader. So we hope we catch you on the next episode of a similar topic. Until then, have a great evening, a great afternoon, and we will catch you later. Bye-bye.